Right now, the entire world seems braced for some gigantic financial shakeup. Some people insist Warren Buffett's investing style is officially outdated. Others argue it's the single greatest wealth-building method that's ever been invented. Take a moment and think about that clash of opinions. Because today we're diving into Warren Buffett's top 5 investing principles to see if they still matter in 2025. Maybe you've heard them 100 times. Maybe you've never heard them at all. But I'm telling you, once we lay them out and connect them to everything happening today, like skyrocketing tech stocks, wild fluctuations in cryptocurrency, and global economic changes, you just might discover a whole new way of looking at your money. Now, for those who are new here, welcome to SecureWealth. Our mission is to help you, the everyday investor, navigate the unpredictable waters of finance with confidence and clarity. If you're tired of clickbait, hype, and shallow promises, stick around. We're about to break down the wisdom of one of the most successful investors in human history, Mr. Warren Buffett, and see if his so-called timeless principles still hold up in the chaos that 2025 has in store. So let's jump right in. I want you to imagine you're standing on a busy trading floor in New York City. Monitors are flashing, traders are yelling, and there's this electric sense that fortunes can be won or lost in a split second. In the midst of that frenzy stands Warren Buffett, a guy who, for decades, has done things almost the exact opposite way. Slow, methodical, and unfazed by the noise. How can that even compete with the breakneck pace of modern markets? Let's find out. Principle number 1, never lose money. You've probably heard this quoted 1,000 times, but let's really dig in. Buffett famously said, "Rule number 1 is never lose money. Rule number 2 is don't forget rule number 1. Sounds almost simplistic, right? But here's why it matters. If you lose 50% of your investment, you don't just need a 50% gain to get back to even. You need a 100% gain. That's a big hole to climb out of. But does this principle still apply in an era where people hop into meme stocks, watch them go to the moon, then crater overnight? Absolutely. Let's say you pour all your spare cash into a random altcoin just because someone on social media said it's the next Bitcoin. It skyrockets. You feel like a genius until it plummets 70%, leaving you in the red. In the blink of an eye, you violated Buffett's rule number 1. The lesson here isn't that you should never take risks. It's that you need to understand exactly what you're risking. Know the downside before you're seduced by the upside. Think of it as building a moat around your capital. If you can keep your losses minimal, your gains can stack up over time without devastating setbacks. Makes sense, right? But wait, what if you're so scared of losing money that you never invest at all, and you watch from the sidelines as everyone else's portfolios skyrocket? That brings me to principle number 2. Invest in what you understand. Buffett always says if he can't sketch the company's business model on a napkin, he probably won't buy it. In a world swarming with AI-driven crypto platforms and cutting-edge robotic startups, it might seem like you could miss out on the next big thing if you stick to your circle of competence. But here's where a story might help. Picture yourself in 2020, hearing about all the hype around certain electric vehicle stocks or brand new biotech firms. You jump in without doing the homework, purely on the rumor that this thing is going to explode. A couple of months later, you're horrified to see the price tanking because the company ran into regulatory issues you never even knew existed. That's the danger of investing outside your circle of competence. In 2025, this is going to be even more pronounced. Technology is advancing so fast, you could literally chase thousands of next big things. But if you don't deeply grasp the fundamentals, you're just guessing. Buffett's principle here is basically a guardrail. Stay within terrain you truly understand, or else learn it well enough that you can explain it in your own words without blinking. If you can't, think twice. Next up, principle number 3, patience pays off. This might be the single biggest difference between Buffett and most modern traders. Where some folks flip stocks in seconds or chase daily rallies, Buffett sometimes holds on to companies for decades. And that's not because he's lazy, it's because he believes in letting compound growth do its magic. Let's say you buy shares in a solid, revenue-generating company that has a competitive edge, a strong brand, and a promising future. Even if the stock dips in the short term, If you hold on for years, you're likely to benefit when that company innovates, expands, or finds new markets. I recall a friend who bought a certain tech stock when it was just starting to gain traction. After a year, it was only up a little, so he sold. 2 years later, the company released a revolutionary product and its shares soared tenfold. He missed out simply because he lost patience. In 2025, when markets can be rocked by tweets, rumors, or global events, patience becomes rarer and more valuable. But that leads us to a dramatic tension. What if you're patiently holding a stock that's genuinely on the path to zero? That question is where Buffett's fourth principle comes into play. Principle number 4, be fearful when others are greedy and greedy when others are fearful. Yes, that's probably the most quoted Buffett line of all time, but it remains incredibly relevant. Look at the market swings we've seen over the past few years. One moment, euphoria drives share prices to unbelievable heights. The next, panic causes a sudden crash. In those moments of chaos, Buffett's approach is to step back, evaluate the fundamentals and ask, is this company or this market being oversold due to panic? If the answer is yes, that's his buying opportunity. If the market is in a frenzy and valuations seem totally disconnected from reality, that's when he eases off the gas. Imagine a scenario in which a popular tech giant experiences a sudden drop because an earnings report looked weaker than expected. Everyone is dumping shares, doomsayers flood social media, and the price plunges overnight. If you believe in that company's long-term fundamentals, that might be your cue to act. But the big question for 2025 is, how do you separate real fear from hype-driven panic? The speed of social media can make a mountain out of a molehill in seconds. Buffett's principle is straightforward. If the underlying business model is solid, the panic is probably irrational. That's your opening. But if you dig deep and find real structural problems, well, that's genuine fear you shouldn't ignore. Finally, we arrive at principle number 5. Focus on long-term value. This is the thread that ties everything together. Buffett doesn't care about next quarter's earnings as much as he cares about the next decade's trajectory. This mindset helps him ignore short-term noise. Whether it's political turmoil, economic ups and downs, or sensational headlines, Buffett stays focused on the company's intrinsic value and how it grows over time. Picture a tree growing in your backyard. You don't measure its worth by how much it grows in a single week. You observe it season after season, confident that with the right soil, water, and sunlight, it'll provide shade for years to come. But let's be real, holding on for the long term can be lonely. Your friends might be bragging about quick gains or scaring you with stories of people losing fortunes. That's where your emotional discipline comes in. Can you weather the storm? Can you tune out the noise? These questions are as relevant in 2025 as they were in 1995. Maybe even more so, given the rapid pace of global change. So are these 5 principles timeless or outdated? Here's the honest truth. They're only outdated if you believe that fundamentals, patience, and disciplined analysis no longer matter. But if you see the market's future in the same way Buffett sees its past and present, that real value outlasts hype, then these principles might be your anchor in the storm. Now I want you to pause and reflect for a moment. Which of these principles have you already adopted? Maybe you're already pretty good at not losing money, but you haven't been patient when the market dips. Or perhaps you do your homework, but you let fear get the best of you when others sell in a panic. This is where you can make a change, right here, right now. It's never too late to refine your approach. I also want to spark a question in your mind. What do you think Warren Buffett himself would do if he were your age, investing in 2025's tech-driven market? Would he ignore emerging industries entirely? Probably not. He's invested in Apple after all. But he'd also apply the same rules he's followed for decades. That's the beauty of Buffett's approach. It's adaptable to any era, as long as the core principles are respected. If this resonates with you, here's what I want you to do next. First, hit that like button and subscribe to SecureWealth, because we're just getting started. We've got more deep dives, practical tips, and real-world examples coming your way, all aimed at making you a smarter, more confident investor in 2025 and beyond. Second, leave a comment telling me which Buffett principle you find the hardest to follow. Is it the patience game, Is it the fear and greed dynamic? I genuinely want to know, because understanding your biggest challenge can help us tailor future content to hit the bullseye on what you need most. Third, after this video, go back and look at your current investments. Ask yourself, am I respecting these principles? If not, pick one principle, just one, and commit to applying it for the next month. See if it changes how you approach buying, holding, or selling. Small shifts can lead to big improvements over time. Ultimately, these 5 principles are more than just sound bites. They're a framework for building lasting wealth in any environment, including the unpredictable landscape of 2025. Yes, times change, and yes, technology is evolving faster than ever. But human nature, our emotions, our fears, our hopes, remains a constant. Buffett's principles speak directly to that human side of investing, which might explain why they still hold so much power. So keep your goals in focus, stay curious, and never let short-term noise drown out long-term wisdom. And remember, the best investors aren't necessarily the smartest. They're often the most disciplined and the most patient. Thanks for tuning in to SecureWealth. Let's continue this journey together, and I'll see you in the next video. Until then, stay focused, stay informed, and above all, stay committed to your financial future. Because just like Buffett always says, the stock market is a device for transferring money from the impatient to the patient. Which side are you on?